Good day everyone, Gary Ender with ShrewdTrading.com. Today we're going to take a look at the euro dollar in several different time frames. First we're going to look at the weekly chart because what we're looking at right now is what are the potential resistance areas. The euro has been moving up for several weeks in a row and we want to evaluate where the resistance points are. And when we look at a resistance point, we're looking at that area on the chart, and then we'll watch what the price action is like when price gets to that level to see if it's going to pause, if it's going to turn around, or if it's going to go through that resistance level. First, we'll take a look at the weekly chart, as I said, and from the highs that we had in the first half of 2011, we see that it made lower highs and lower lows all the way down to the recent time frame here. What we're looking at is the Bollinger Bands. We also have a 10-period moving average on this chart. The red lines are the Fibonacci retracements. From this high down to this low, we see that this is the 38, the 50, and the 62, 618 are typically called the 62% retracement. Now we made a lower low here, a lower low here, a lower low here, and a lower low here. So throughout all this downtrend, we were making lower lows and we were making lower highs until just recently when this high was taken out. So now as this moves up, we're looking at, well, what are the potential resistance points? So if we come in a little bit tighter on this, we see this old support area. This old support area finally broke on this week here, and this is a weekly chart, so each of these candles is 1 week. Now as price comes back up to that level, that could potentially be a resistance level. What else do we have? We have the upper Bollinger Band coming down to meet price at this level. So here's our first resistance level, and we have to evaluate what price is going to do there. Now price can turn anywhere, but more times than not, it turns at a resistance level. For example, why would it turn in this area right here? Well, we've got traders that maybe took a long here, a long here, a long here. We have long plays that got taken in through this whole support level. And for those players that didn't get out as this crashes down and it moves back up, they get back to break even. They say, hey, we get back to even, I'm out. So they exit the market here and it makes the market turn back down. Maybe just a retracement, it could be a major swing point. So that's one possibility. Or if it breaks right up through this, what happens then is this upper Bollinger Band turns up relatively quick and we can have price follow that upper Bollinger Band. Similar to what happened here when this turned down, we see how this lower Bollinger Band in the opposite action turned down and price followed along that lower Bollinger Band. We could have the same thing in reverse if price breaks above that Bollinger Band. The next resistance point is where I have this next arrow. That's the 38% retracement. And above that, we have a swing high here, a swing high here, and then at the 50% retracement, which is this middle red line, we see a swing high here as well. So if we were to say what is the best resistance on here, we would actually say this 50% retracement because it also lines up with a swing high. But we also have the 38% retracement that lines up in the middle of this consolidation, and oftentimes consolidations, when price comes back to them, they work as resistance or support. In this case, it would be resistance. So we don't need to guess as to where should I come out of long position or where should I take a short position. We'll let the price action determine that. We just have to do a good job of identifying where those resistance points are, and for me, on the euro dollar, those are the resistance points. Now this again is a weekly chart. We can turn this into a daily chart and we can see these same resistance points. So this is what's going on today. Today is September 12th. It's about midday right now. After the German courts approved the ECB action saying that it was constitutional, the euro moved quite a bit higher. It's backed off a little bit from that time, but we see on the daily chart here it's still riding this upper Bollinger Band. And right now my target on this is the 3,000 level. And what I want to see, if price gets up to this level, I want to see how that reacts. And remember, that was the first resistance level that we identified on the weekly chart. We can see since the bottom here, where we have a very clear reversal, we have a low, a higher low, and it keeps making higher lows as we go up. It's finally cleared above this resistance level from this swing high and working its way up to that 3,000 level, which again is where we see the upper Bollinger Band and the old swing lows on that weekly chart. And one thing we definitely have to take into consideration here is the Fed meeting, the FOMC meeting tomorrow, because the odds are extremely good that the euro-dollar, the dollar index, the dollar in general, and all of these forex pairs have the potential for a very dramatic move based on whatever Ben Bernanke reports during the FOMC announcement and the press conference that he has afterwards. The euro on the daily chart still bullish now, but I will be watching these resistance levels very closely, and tomorrow's a day where you really have to be on your toes as the Fed makes these announcements with the potential of a lot of movement in these markets. So this is Gary Ender from ShrewTrading.com, where our goal is to stay on the right side of the market.